Good morning everyone, Crypto Lemon speaking. Today is Sunday, September 13th, 2020 and you are in for a new daily crypto news show. So first news of the day, we have a Bitcoin whale spotted at $10,570. We'll talk a bit more about this, how it shows resistance and support lines actually. So what to watch for SushiSwap cuts block rewards from 1000 to 100. So this is really important as the entire sushi swap story unfolds. It seems that we have new new facts and new things happening on a daily basis with this project, which is kind of fun. It reminds us of the ICO craze. Then we have DeFi mainstreaming impossible until DEXs integrate layer 2. This is something really serious and that has been holding back mainstream adoption for DeFi over the past few months. Gas fees. Morgan Stanley Strategist recommends Bitcoin. We'll talk a bit more about that. And finally, DeFi's total value locked in is a crooked mirror, and we'll talk about why. So first things first, state of the market. So the market is at 353 billion total market cap for cryptocurrencies. We have Bitcoin north of 10.5k, which is actually gaining almost 2% on a 24-hour basis. Ethereum having a nice run at plus 4%. So first news of the day, Bitcoin whale cluster at $10,570. Most important level now. So what does it mean? As you can see, we have this graph where we see when Bitcoin whales accumulated Bitcoin and did not send them anywhere or spend them. So the bigger the bubble, the more accumulation that had taken place. So we see two levels, a big bubble at $10,570, which is the current resistance we're trying to pass, and another big set of bubbles around 11.8k. So these are the two big resistance that chartists and technical analysts are talking about if you want to go back into a bull run. So this is quite interesting. On the same topic with whale, we have a kind of a bearish metric, so we're not just gonna talk about the bullish ones, but this metric is the percentage of fees that are transaction from your wallet to an exchange. So basically this is a percentage of fees that miners get from people withdrawing Bitcoins from their hard wallet or any kind of other wallet and sending them to exchanges. So this could be bearish because it could mean that the people are ready to sell their Bitcoin. As we see on this graph, this metric range reached more than 12% just before the crash. When we were at almost 20k, it was just at 12%. Then it went down to between 4 and 6% for years. It's been trending back up since March 2020, with people moving Bitcoin on exchanges, and now it's back apparently at almost 10%. So we should be careful with that. Depends on a lot of things, but if these are miners selling their Bitcoins newly mined, or if they are long-term holders selling, this could be negative for the short-term price. DeFi mainstreaming impossible until DEX integrate layer 2x per se. So this is a conversation we're having for a long time. It's not possible to have DeFi for, let's say, the casual user because fees are just too high. Even I moved to EOS DeFi or Tron DeFi just to try it out and to understand all the possibilities, the risk and everything, because on the Ethereum networks, even if I did a good investment, I was paying $80, $100 in fees, and that will just eat my return. Except if you have, I don't know, 50k to put into a mining liquidity mining pool, it doesn't really make sense to do it on Ethereum at the moment. Except layers 2 solutions are there. I need to read more about it, but we have 3 at the moment that are really useful. We have OMG network, Loopring, and ZK Sync. So all of these allow for with different approach, but to make a transaction at lower fees, and this transaction are still secured. So what they're saying is that either we find a way to make this mainstream, like to use these layer 2s, which is not the case. Most people are paying the fees like dumbasses, and I'm the first one of them. But they showed, actually, I read an article a few days ago that only 3% of people were using layer 2 in these DeFi craze, which is outrageous when you look at the price of the fees. Maybe we need more tutorial. Maybe I'll look at it to make a video on how to use them. So this is something we need if we want mainstream adoption. And this is what Vitalik has been saying in this statement you can read here. To those replying with gas fees are too high, my answer to that is, well, then more people should be accepting payments directly through DK Sync, Loopring, or OMG. Seriously, scaling to 2.5K plus TPS for simple payment application is here. We just need to use it. I kind of agree with him, and I need to use it personally, so I'll probably make a video on how to use it, and this maybe will help us to solve a lot of issues on Ethereum fees at the moment, as actually Ethereum 2.0 seems to be really complicated to implement. SushiSwap. So they cut the block rewards now from 1,000 to 100. We talked about the fact that they removed the liquidity to their own SushiSwap platform from Uniswap. This is something to look at, because in my mind, it doesn't make sense to provide liquidity to SushiSwap at the moment, because you'll get only 2.5% of the fees. 0.25% of the fees, and 0.05% will go to sushi holders. But you will accumulate sushis less fast than the fees taken away to pay the current sushi holders. So if you were to provide new liquidity, I think it makes more sense to go back actually to Uniswap. So this is a big hurdle. This is my opinion. But what the big thing is kind of the same thing in this article, that people were yielding, and now it's really the follow-up on this project, and to see if they can retain the liquidity through this governance token that is a truly decentralized one, and to see what's going to happen with the new listing of pools. So this is quite interesting, and when we look at SushiSwap protocol analytics, so they made it like uniswap.info, we saw that the liquidity has been at 1.4 yesterday. It's down at 1 billion today. So this is quite a bummer, if you ask me. You lose like almost 30% of your liquidity in just a day after the block rewards have been reduced. And we see what's happening, what will happen next. To compare Uniswap, you can see the reverse. So they were at almost 2 billion, and up. What happened? SushiSwap stole most of it, bounced back down, and now back at 848 million. So now the two pools have almost the same liquidity, more or less. But let's see what happens with SushiSwap. I'm quite negative. I think actually liquidity will go down on SushiSwap, as if I were to provide new liquidity, I wouldn't provide to SushiSwap, but probably to Uniswap or to all the new vampire kind of protocol. Some good news from the banking sector. Morgan Stanley Strategist recommends Bitcoin. So, okay, this is kind of a title like Morgan Stanley's bank recommends Bitcoin. It's not really the case, actually. It's one of the strategists, actually head of emerging market, Ruchir Sharma. I'm sorry if I pronounce the name wrong. But what he's saying is that with the money printing ongoing and the inflation risk, you should buy gold. And what he's saying also is that if you're millennial, you will probably not buy gold, but buy Bitcoin, because you think this makes more sense for the future, and you think the value is higher as a use case or as a storage of value. We've seen a lot of different surveys actually highlighting this, and I think it makes total sense, and I agree 100%. To me, Bitcoin is just the gold of the new generation. New generation meaning sub 35 years old. Like, it makes more sense for me to hold Bitcoin than to hold gold, because gold, like, what can I do with it? I don't care. I don't think we care about jewelry anymore. in the millennial generation, and even more for the new generation coming. We care more about having a great iPhone or a great app or something like that than gold. So this is interesting, as it of course gets mainstream a lot. So to quote the head of emerging market, he said, to have about 5% or so of your portfolio in gold is not a bad idea, and if you're a bit more adventurous, and I guess it's more to do with demographics, and obviously search for Bitcoin and other cryptocurrencies. So this is what we said, but this is the same narrative: collapse of US dollar at some point. Some analysts think it will be after the election, and push for inflation. What do you look for? You look for something that will resist to this inflationary pressure. So Bitcoin and gold are there to help you out. So last news of the day: DeFi's total value locked in metric is a crooked mirror. This is something that's been said and going on for a while. The total value locked is kind of a stupid metric, because with DeFi it allows you to change, for example, one Ether in one wrapped Ether on one platform, and to take this wrapped Ether and add to a liquidity pool on another platform. So actually, with just depositing one Ether, when we look at the total value locked, we locked 2 Ether. So, and this can go times 4, times 8. So they're just saying, look at the metric, but be careful. Most of the money might be counting once, twice, or even 4 times. So this is Scott Lewis, founder of DeFi Pulse, that everybody takes the data from, is really looking at it and trying to refine it to avoid double counting. And so dollar value is quite important. So you can see it went down with the drop, and it's back now to 8 billion. And BTC, Bitcoin locked in DeFi, is just going up, as many predicted over the past weeks. So also there is some kind of short-termism that could crash the market. This is also something I agree with. So DeFi users are basically people that understand financial system, that understand what they're doing. They're usually people that are kind of tech savvy, or at least know a bit more than the average user of Bitcoin about cryptocurrencies. And so a lot of them are looking for short-term gains, myself included, rather than the actual functional utility of the projects. Well, doesn't it remind you something? It sounds like we could quote the same sentence for the ICO craze. So people, be careful. Like I always say, when you mine actually new DeFi token, I like to use stablecoin plus another coin to not lose value, or to lose less value if things go wrong. So please be careful out there. It's a booming market. We can make a lot of money, but we can lose a lot too. And all these yields that are honestly outrageous, we need to be careful, as some even people in the field kind of compare some DeFi protocols to Ponzi's or so. So please be careful out there and invest responsibly. All this daily crypto news was not investment advice. You should always do your own research, and I wish you a great Sunday, and I'll see you tomorrow. Talk to you later, guys. Bye bye.